Thank you so much for taking out time for us. Let's start with some of the results impact companies. How would you look at LIC Housing Finance?
Well, LIC not exactly the best play right now for the short term. It's not really moved up so much with the market, so the momentum is really lacking there.
Right. Any other name? Diwan Housing?
No, I think in the financials, essentially, I mean, the housing sector has not really shown that much of an uptick. We did see the bank index actually start moving higher over the last 2 days. And I think that has kicked off some positive momentum in the relatively weak banking stocks, but not so much in the housing space. So within banking stocks, we would probably want to look at some of the private sector names again. The likes of ICICI Bank, Axis Bank and Yes Bank come to mind. But if you ask me which is the strongest, I think Yes Bank would probably stand out. It probably fell the least. It managed to hold on to its 40-week or 200-day average, whichever one you're really looking at. And it has from there started what looks like a rally that can essentially move to much higher levels, maybe even retest the 2016 highs. So I think out of all of them, the one that looks like it can do that is probably Yes, and that is why I think I would probably rate it at the upper end. But we are seeing positive momentum even in Axis Bank, which is at least broken out of the falling trend that it had over the last 4 to 5 months. And in doing so, it looks like at least a bounce back, a good bounce back that has started. But then it's gone up for 6 days, consecutively, and so you should typically wait for at least a dip to come in before you really, look at an re-entry point for Axis. And the third one I mentioned was ICICI Bank, and that's broadly been in some kind of a rising channel since Feb of last year. So it's almost for 1 year you've seen this stock simply move up and down in the same broad 5 to 10% range, and it almost broke the lower end but did not go below it, and has now actually come back from around the 250 mark, and the upper end would be a little above 270, 280 at the upper end. So it's in this broad range. Probably it attempts to go to the upper end once again, because
as far as IT names are concerned, Infosys and TCS, they have also declared their numbers, maybe NIT Tech as well. You would give your view on them?
Well, my long-term view on the tech sector remains that they are in a larger degree downward trend, and within that they keep selling off, then they bounce back. But if you just look at Infosys, for example, it's made 2 lower tops and bottoms since sometime last year, around that it actually peaked and started this move. And so even in this bounce back, it has essentially gone, tested its 20-week average, some of the long 2-3 year trend lines that it broke, which were close to around the 1000 to 1020 mark. And moment it tested that, it again sold off from there. The lower end of the range is at around 950, which is where we are very close to, and you break that, then you'll probably see the sell-off accelerate. Till that point of time, it might just hover between 950, 980 for some time. But once it breaks 950, 940, it straight will probably lose 50, 100 rupees from here. But the broader call is that they've topped there in a downtrend, and you're just making one more lower top in Infosys compared to where it was maybe sometime in early October.
Any view on United Spirits? It's up 6.6%, 2087 for that name.
No, I don't have a view on United Spirits in particular. No.
Any view on United Phosphorus Limited, UPL?
That segment, I think it tends to pick up every time you're close to something like a budget. It's not been on my tracking list, so I don't have a near-term picture on it.
Right. Do you track REC PFC? Is that a name which, or are these the names that you like?
Well, we've looked at them on the sell side recently. We haven't really tracked them for a meaningful bounce back, but right now the market is in an uptrend, so we're not really shorting anything. In fact, we've been looking at the upside potential, and the sector that we were probably riding the most, which we discussed I think last week also, has been the commodities related sector. So my essential view has been that the commodity cycle has turned from being bearish to bullish, because if you just track commodity prices over a 4 to 5 year time horizon, then you had around a 5-year bear market on the CRB index, and this year was the first positive year, and typically then bounce back could continue for another year or two. So we've taken a macro call that the commodity sector is bottomed and is likely to go higher, and that should pretty much include all the commodities with some lead lag effect, which means not just the base metals but precious metals and agro commodities as well. But within that, I think we saw one of the best rallies in the last couple of weeks in the metal space, essentially because the metal prices took the lead in terms of bouncing back after what was a late year-end correction in most commodities. So once that correction was done, you saw copper prices bounce back from $2.3 to $2.6. You've seen aluminium race off to a new high above what it made in 2016. And that has driven an up move in, I think, the whole metals pack. So I think I like all the stocks, both the leaders, which are, of course, Hindalco, Vedanta, Tata Steel. But we also started looking at the second line stocks like, National Aluminium, Hind Copper, maybe even a Steel Authority. So all of these came into our radar, I think, GSW. So it's the entire sector. I will not leave any name out because when you're seeing a commodity cycle turn, it's going to affect almost everything. And so I think we've seen one rally that has occurred. We're seeing some correction today, maybe a couple of days. We watch out how deep this correction is. But then once it's done, we'll be looking at again being on the long side, because I think this is a trend that should be going on for the rest of the year, and will have less to do with what the index itself does. So whenever you get a big index sell-off, you'll probably see a correction, but you continue to see higher bottoms in the commodity stocks themselves, which is also a pattern we saw in the last year. If you look at Tisco, Hindalco during the recent correction in the market from September to December, which was pretty steep, you haven't seen so much of a sell-off in the metal stocks themselves. So that actually adds to their relative strength on the way up.
Right. In terms of metals, is your view also that the underlying metals would continue to do well?
Yes, so that's the primary reason to be bullish on the commodity space, is that that all commodity prices are going to go up. So that's essentially almost saying that you're going to get inflation coming back, whether it shows up in numbers or not, but all commodity prices are going to go up. And so metal prices by themselves, like I said, aluminium prices are already at an all-time high, or rather a 52-week high. They've surpassed the high we made in 2016. Copper pulled back from the $2.7 high it made, but it's come right back there after the recent correction, so it's already rallied. And I think these trends will continue, yes. Whether it's copper, zinc, aluminium, lead, nickel, I think all of these, nickel is probably the laggard in the lot, but I think it should be picking up and joining the rest of them soon. But if you just look at today's markets, the one space that I think a lot of people ignore, because you're only looking at stocks and you're looking at metals, is precious metals themselves. And today I think both gold and silver have taken out their last 2-3 day highs. And that too is another segment within commodities that should be interesting. And you should be seeing a further move higher from here, I think, in the precious metal space. So that's one area that I think investors should have some exposure, because in general, sometimes when you have these precious metal rallies, they actually tend to do better than the Nifty itself.
Rohit, thank you so much for taking out time for us. Always good to get in a perspective.